Hello and welcome to Broadstreet, a 10-minute program of current business and financial issues here on Voice of Nigeria, Lagos. I am Stephanie Eruka. The Postmaster General of the Federation, Malam Ibrahim Baba, has said a Bangladesh firm, International Investment Facilitation Company, will deliver the framework for the financial inclusion of Nigerians living in rural communities by December. The Nigerian government had in February appointed the Bangladesh firm as advisor for the project that would transform the Nigerian Postal Service into a financial service provider. The NIPO's boss put the cost of the advisory service at $281,000. The project is aimed at reducing the number of Nigerians that have no access to financial services, especially in rural communities. Working with different financial service solution providers, the project, being financed by the Central Bank of Nigeria, will see to the transformation of the post offices and post agencies across the country into financial service hub in order to extend services to unbanked communities. Baba said the Bangladesh firm was expected to conclude its work by December to culminate in the provision of a framework for the operation of the financial inclusion project. Stocks in Nigeria are lower today after investors crashed in on the market post-election rally. Traders say that the fall across the sector is linked to profit-taking. After the emergence of General Muhammadu Buhari as the president-elect on March 28, stocks at the Nigerian Stock Exchange rose by over 8%. Now, some traders say the frenzy is over. Andrew Saku, a stockbroker at the Investment One Financial Services, believes it's not yet over.
I do not really think that it's all over, so to say, because if you look at the level of acreage in the market last week, it was overwhelmingly strong. And of course, the key driver, like we said earlier, is the fact that a lot of people who are sitting on the sideline, the passive investors, so to say, saw opportunity in the settlement of the issues around elections and saw opportunities back in the market and therefore return. So yeah, 2% has been taken back, but I think in terms of fundamental valuations, nothing materially has changed. And I think that should be the critical decider for investors, not so much the daily oscillation in the prices. Right. Don't forget that most of these stocks, we have, I think consensus opinion had been that they were largely oversold. And given the fact that some of the reasons that have kept them at the levels that they were, particularly the issue of election, has been settled. So to that extent, I do think that there is still upside potential for quite a number of stocks, going forward.
Whenever there's a massive news flow like the elections, the market is likely to flow to or overshoot one way or the other. The stockbroker says for the first time this year, the overall index has returned to the positive side.
For the first time in the course of this year-to-date performance, we saw for the first time last week the overall index returning to the positive territory. All along the year we had seen a massive decline, but don't forget that in February we had the market decline in excess of 20%. Therefore, it is understandable, the kind of reaction that greeted the market last week. And that decline, don't also forget, was not largely driven by fundamental factors. The issue of election was very critical. Yes, we have concerns around the oil price and all that, but I think the general negativity that kept the market at the level that we had for much of the year, was the issue of election. And that, like we agree, is largely resolved. Why is that critical? It is important because, investors are interested in having a clear direction as to policy, as to the sustainability of, the performance of these companies. And that can only come when the enabling environment gives them the indication of hope. I think to an extent, regardless of the fact that the new administration is yet to come on board, it does appear that on a sentimental basis or even psychological basis, that rested some of the concerns that we had. Yes, going forward, we'll continue to see issues, around the oil, price, the reference to, the foreign exchange, the level of reserves in terms of the moderation and even the FX price. These are issues that going forward, I think, will be very clear, or rather much more clearer to investors, and that should give them enough room to be able to decide going forward.
And away from the stock market to the financial sector, where lack of political will and poor access to finance has been identified as major reasons why Nigeria is lagging behind its West African peers such as Ghana and Sierra Leone in renewable energy development. Industry analysts have stressed the need for the government to provide incentives for the development of renewable energy sources such as solar and hydropower to engender a robust energy mix. The Executive Director, Greenado International Limited, and former Renewable Energy Manager, Bank of Industry, Mr. Lawal Gada, said lack of political will, access to finance, and over-reliance on oil and gas are major factors hindering the development of renewable energy in Nigeria. He said there should be clear policy statements from the government backed by the commitment to implementing a renewable energy policy. Now, according to him, there are over 100 renewable energy companies in the country, but demand has been so low as it is limited to pilot projects like the Millennium Development Goal projects, as well as local and state government projects. The Nigerian government has secured $1 billion for a micro, small and medium enterprise wholesale bank. The bank will be launched within the next 2 weeks. Announcing the plan at a meeting with business owners in Abuja, the Minister of Industry, Trade and Investment, Dr. Olusegun Aganga, said the initiative would serve as a catalyst to the growth of small and medium enterprise sector. According to Dr. Aganga, the government had supported the sector with over 115 billion naira to boost job creation and poverty reduction in the past 4 years.
Over the last 4 years of this administration, the Bank of Industry disbursed about 115 billion naira to MSMEs across the 36 states of the Federation, represented 544% increase over a 4-year period before then.
The Director General of the Industrial Training Fund, Regina Gali, spoke on how the agency trained over 74,000 in skill acquisition, promising to assist Nigerians searching for how to enhance their skills.
The ITF remains a special touch point for small establishments. ITF reaches youth when they are most vulnerable and give them skills. We also work with SMIDAN and will continue to work with SMIDAN and the other BDS providers to turn these youth into viable establishments.
Small and medium enterprises in Nigeria have clamored for access to funds in order to expunge their businesses and further contribute to the growth of the economy, that is, the biggest in Africa. With the initiative, the challenges of funding are expected to be laid to rest. That's the much we can take on this edition of Broadstreet. You can join us again tomorrow for a fresh edition. I am Stephanie Eruka.